Hello and welcome to the Immaterial Podcast, where we explore the front page and the footnotes to discuss accounting, the law, white-collar crime, and everything in between. I'm your host, Chris Ekimoff, and today we're back with one of our Record of Consultation episodes, sharing the experience, background, and perspectives of, in this case, two esteemed practitioners in the enforcement, accounting, and legal space. Today, we're jumping into an interesting, if not nuanced, topic, what we'll generally term as tax enforcement. I think everybody out there viewing and listening probably knows what taxes are. I think all of us are scared of what tax enforcement is as individual taxpayers, but maybe we'll explore some of that today. The concept, right, has always been complex. The way that cases might be identified, developed, and prosecuted, especially today, feels maybe meaningfully different in the current enforcement landscape than it does even 10 years ago. Part of that relates to the current enforcement environment. Part of that might relate to the complexity of specific tax issues. And part of that's really kind of the way the world works today in this data-rich and kind of automated audit environment. If you don't live in this space every day, it might be easy to misunderstand how all those kind of elements play out in practice, how a case is additionally identified, how it's developed, and what decisions are made by enforcement folks along the way. Today's conversation is looking to solve that problem, right? To get to that practical level of input from two of the greats out there practicing in the market today. I am joined today by Jonathan Schnatz, principal in the Forensic and Valuation Services Group at Withum in Philadelphia, who spent over 2 decades with the IRS Criminal Investigations Division, or IRSCI, as we like to call it, and John Mulcahy, counsel in the Government Investigations and White Collar Defense Practice Group at Nixon Peabody in Boston, who brings his experience from the DOJ tax and U.S. attorney's offices. Jonathan and John, not to be confusing on names, but great to have both of you join us today.
Thanks, Chris. Great to be here, and thank you so much for having me on, and really excited to have this conversation with you and Jonathan.
Yeah, you got it. So, John, you made the mistake of piping in first, so we'll kick it to you. I want to start out in this Record of Consultation episode with, a fan of video games and comic books. I want to hear your origin story in this tax enforcement environment world. So, kind of talk us through earlier in your career how you got interested, maybe the types of case you worked on, and kind of your career through, a relatively recent past couple of years transition into private practice.
Well, thanks, Chris. So many years ago, earlier on in my career, I was a state prosecutor in Massachusetts, but that followed a federal clerkship. And when I was a federal clerk, I really, you know, admired the federal prosecutors who I saw in court. And I decided at that point I wanted to pursue that career trajectory, if you will. I wanted to really be a federal prosecutor. So I did a few years as a state prosecutor in Massachusetts. And then honestly, I think we can all relate to this. I kind of fell into this specialty in tax work. I had an opportunity to go to the tax division in DC in 2014, and it was very attractive to me because I really wanted to try cases. I wanted to get into court. So I did about 4.5 years at the tax division, did all kinds of cases at the tax division, individual tax returns, employment tax returns, cases involving public officials, cases involving small business owners, ran the gamut in terms of the types of statutes that we use in reviewing and prosecuting the cases we did. So I got really solid tax background at the tax division. And then in 2018, I was lucky enough to get a spot at the U.S. Attorney's Office in Massachusetts, which is my home state, and returned to the Boston area and continued to do a lot of tax matters just because I developed this specialty and I had fun doing tax cases. I thought they were a lot of fun. So did U.S. Attorney's Office from 2018 until February of this year when I hopped over to private practice. And as I've told you, Chris and Jonathan, I'm excited to now use all the, expertise and knowledge and what I gained as a federal prosecutor on the other side, if you will. So that's a little bit about my background.
Awesome. And I'll take a note for the listeners and viewers out there. John is one of the few people who said working tax cases is fun. I mean, that's the pull quote for the episode. But Jonathan, want to give you a chance to give us your origin story, talk about your time with IRSCI, how you got involved, and maybe some of the things you worked on up until you joined us here at Withum a couple of years ago.
Absolutely, and thanks also, Chris. John is right. Tax cases are fun and
There we
awesome.
go. We got three
Only
nerds
the
here
only
together.
the best and brightest can work them. So I think
I love it.
John is
Amen
right
to
on
that.
that.
I
Amen
Yeah.
to
like it.
that.
So my origin story actually starts in high school when we had a Secret Service agent come to career day and told fantastic stories about being on President Reagan's protective detail. He was a lead agent in charge. So he had me there. So started looking into federal law enforcement. At the time, the majority of agencies were in the Treasury Department. So, which meant you had to have some sort of financial background, and even the FBI, I've always heard they hired accountants or lawyers. So decided to study accounting and finance in school, got my degree, and again had federal law enforcement as the ultimate goal of where I wanted my career to go. So went into public accounting, worked there for 3 years, got my CPA, got licensed as a CPA, and then as I was starting to look around at various federal law enforcement agencies, I met an agent, an IRS CI agent, through mutual friends, and he recruited me to the agency. So went to the academy for 6 months, had really no idea what we were doing. When you first start, it's, even though you're in training for 6 months and you learn all the techniques and all the fun stuff. Started in Philadelphia, where I'm born and raised and from, and the cases when you first start, it's a lot of basic cases, learning cases, where you really get to practice your skills. So you do interviewing, you do those types of building cases from the ground up. So I worked as a case agent for 17 years, then became a supervisor, and during the case agent working period, spent a lot of time working public corruption in the city. Was on a public corruption task force with the FBI and DOJ, and then worked a lot of high profile cases that were in the news, on the front page of the newspaper. Very exciting, very rewarding, that portion of my career.
Hmm.
And then I switched into international cases. So I was provided a case that had been referred over from the civil side of IRS, dealt with offshore banks, offshore service providers, trust companies, and worked that case for about 8 years. And it was very, very complex, very difficult, but very rewarding, and it learned a lot. So that was, again, very, very challenging, but very rewarding part of my career. After that, became a supervisor. So I supervised agents working all types of cases, and then transitioned into our headquarters section, where I was in the international. So I was helping manage various international programs, and then was assigned to work with a portion of our foreign counterparts in what's called the J5, so the Joint Chiefs of Global Tax Enforcement, which is United States, Canada, the Brits, the Dutch, and Australians. I think that's five. That should be
Hmm.
five if my
So,
math
well,
is
the
correct.
CPAs will check your math on this, Jonathan. But I
Yes,
agree that was
I
fun.
could see you using your fingers, Chris. I was doing that under the table as well, and that was great. That job was fantastic. So it was basically the 5 countries, tax enforcement agencies from each country, coming together and sharing information, intelligence on promoters and bad actors that were helping people hide money offshore, commit major frauds, and launder funds. After that, hit my 25 years in federal law enforcement, which is the golden ring. So I was able to retire, and joined with them about a year ago, again in the
Okay.
forensics practice.
You got it. I love kind of the similarities, right? Of the excitement about the cases, right? Is something I think you both share. Although, John, you might have had a cooler experience in middle school or high school, not hanging out with Secret Service agents like Jonathan did. But
I
maybe,
don't
I mean,
think
that could have
so,
been a good.
Chris.
That's a cool spot to be in.
Get out
So
of jail free card in high
you
school.
got. I'll see how well that works going forward. Um, so thank you for the background, right? And I think we'll level set and do a little bit of definitional stuff here. To me, really, I think the general public and the average individual outside of the tax enforcement issue believes that a case starts with me. We'll start with kind of I'll say regular, filing a federal tax return and that information being incorrect or purposefully obfuscated, omitted, etc., and the government catching that and then in some way, right, whatever that catching is, if that's analytics, if that's a tip, if that's some other type of program. Is that kind of an accurate way to think about how cases start, or are there other nuances there? John, we'll start with you.
Yeah, I think Chris, you raised some good points. I think when I was at tax division, I did criminal cases.
Mm-hmm.
So, the IRS, in terms of how it's set up, and Jonathan can probably refine this better than I can, but
Of course.
essentially it's civil versus criminal, right? And looking at it more broadly, kind of like big picture, a civil matter tends to be in a situation where someone, like you set it up, someone files a tax return and there's, income that's omitted, right? Like they don't, but it's a mistake. It's an accident. They didn't do it on purpose. That's a civil matter. In those situations, if the IRS finds out about it, what's going to happen 9 times out of 10 is it's going to be resolved civilly. You're going to have to pay the IRS, make a correction of that tax return. There may be some interest penalties that are involved as well, but you just pay the money and then, everybody moves on. The side that I was on, the criminal side, and we can talk more about this, but there are civil cases that then become criminal. The big distinction is a case becomes criminal because there's evidence of fraud, meaning there's evidence of some sort of, hiding, concealing by the taxpayer. Once there's a whiff that that's going on, then that's the point where the IRS says, okay, wait a minute. We're no longer in civil world. We're now in criminal world. And they'll start looking at it as a potential criminal matter. So that's just high level, the difference, Another way to think about it is like, again, civil is mistake, accident, criminal is like willfulness, right? Like willfully trying to hide something or play games, if you will, with the IRS.
Yeah, so I like to think of it from, say, an independent contractor, a 1099 employee who has multiple relationships. They might get 4, 5, 6 1099s a year. If you get 6 and you only put 5 on your return and you forgot the 6th one, oh crap, I'm sorry. I owe you an extra $100 in taxes for that 6th one and whatever, five extra dollars in interest and penalties for missing it. The flip side of that is, I'm a 1099 employee and I'm working in concert with a bunch of other people to funnel cash to each of us individually and not have a 1099 filed, not have a legitimate organization, right, to go there. Jonathan,
Right.
is that kind of something you saw on the IRSCI side? Is that an easy way to clarify it?
Absolutely. So to build off of what John said, typically what we would see in CI is an individual that would use nominees for bank accounts. So they might open a bank account in a kid's name or their mother-in-law's name and have income from the business or a transaction deposited into that bank account. So that way the bank account is not in their name. They don't give that information to their CPA when their tax return is being prepared. That is an intentional act to hide income from the IRS versus in John's and your scenario, if you forget a 1099 or bank interest, the IRS computer system is going to match that and say and send you an automated letter and say, you
Right.
forgot to report this
Yep.
$100 and
Yeah.
you owe us the money.
Yeah, Bank of America is telling us that you
Yes.
should have had this on your return. It's kind of, that two-party system is something that when I started doing my own tax returns kind of hit me in the head of, oh yeah, of course, right? My employer is sending all this in to say, Chris Eckimoff exists. We paid him this much. We withheld that much, that difference. So if I don't file a return, right, that's often one of the jokes is if you don't want to get caught for tax fraud, just don't file a return. It doesn't always work that way, right? And I'm sure you guys have good examples of that. But that kind of civil and criminal, I think, is an important distinction. And I think, the value in our discussion today is really focusing on that criminal side. That's probably the cooler or more fun cases, we'll say. I don't want to speak for both of you. So kind of the general, regular rank and file federal taxpayer is probably never going to get anything related to a criminal issue, right? Civil, maybe, right? You miss a return or there's some, reporting period that you're
Right.
following from a business perspective. So I think maybe Jonathan, starting with you, if you can, really, where do criminal cases come from? And maybe kind of a breakdown in your career, percentage that were referred, percentage that were individually identified, and maybe some other ways that they're kind of brought to the federal enforcement world.
Yeah, so I think there's a bucket of sources for criminal cases. One, as you mentioned, are referrals from the civil side. I think the IRS is always trying to increase that number because the civil side is much bigger than the criminal side, and they just see a lot more taxpayers, have a lot more interaction. So in that case, a civil examiner may find something, may find an indication of fraud and send that over to us or to CI and say, we think that there's fraud here. You should take a look. Another very good source are either the U.S. Attorney's Office or another federal agency like the FBI. So DOJ or the FBI may be involved in a white collar fraud case, and they have, again, indication that somebody's using a nominee or has a bunch of money, and they just think that there's no way, a lot of money, a lot of assets, and they have an indication that the person is not filing accurate tax returns. And then there are just a series of other ways. Banks file reports with the government, SARs they're called. Almost every CI office and U.S. Attorney's Office has what's called an SAR review team. So they would get together monthly, quarterly, and pull SARs that are filed with the government and pick the best of the best and say, these individuals look like there's either a fraud and or a tax case, and that's where really a lot of cases are sourced from criminal from CI.
Got it. John, same
Chris,
ideas or did you see something different? Yeah,
I was going to
please.
say, can I just add on to something
Absolutely.
Jonathan was just saying? Jonathan, the SAR stuff, I agree with you completely. I have personal experience, I'm sure you do too, where we built cases from the SAR or the SAR working group. We had one in Boston. I actually spent some time too in Massachusetts. There was a Worcester branch of the U.S. Attorney's Office. In Worcester County, we had a SAR working group too. So that was a treasure trove, if you will, of great information that we used to develop cases out of. And again, that's, I think Jonathan already said this, that's information, Chris, the banks are reporting that they're required to report, under the Bank Secrecy Act to federal authorities as to,
Right.
suspicious transactions they
Yep.
see, like kind of things that we were talking about, like Jonathan was talking about earlier, someone using accounts in someone else's name or lots of cash transactions that can't
Exactly.
be explained. So yeah, SARs are definitely used a lot by IRS agents.
I always go back to the famous financial crime movie of Scarface. And there's that one montage scene where he's like buying a white Bengal tiger and he's taking duffel bags of cash into this bank branch, right? Obviously, that is the most hyperbolic version of what you're talking about. But knowing that to interact with the financial system is to participate with entities that are required to, and obviously most, and if not all upstanding banks obviously do, file this information with the authorities, even if you yourself are not filing appropriate returns, that information is getting out there. And one of the things I've always found so interesting about federal law enforcement is the randomness by which some of the larger, I'll say, technical cases can develop. Right? You've got FBI, local law enforcement, state, police out doing low-level criminal work, we'll say, not low-level in terms of importance, but low-level in terms of dollar value. And they will, bust into a safe house or end up, arresting a local, drug dealer or human trafficker, kind of all these terrible things you see. And then you kind of, through going through the documents in that building or on that person, you are now exposed to this whole financial network of individuals and opportunity that I'm sure there's a lot of, I'll say, financial fraud up front to look at, but then down the line, right, there's always going to be a tax component to that comes on too. So I'm sure both of you have experienced that too, where you get a call of, hey, Johnny on the corner, we just, ended up taking down his low level operation and we see a lot of connections to a lot of interesting things. You guys should take a look. So that kind of, I always like to marry up that really, CSI televised component of law enforcement too, where it actually hits the courtroom and the spreadsheets, if you will, down the road. So I think, I want to talk too, before we get into some real specific case details, just kind of your take on where things have changed over the past, say, 10 or 15 years in tax enforcement broadly. And John, we can start with you. You've been in private practice for a year now, but, prior to that, you spent a lot of time trying these cases. What technology or scheme or technical aspects of criminal investigations and the U.S. Attorney's Office approach to tax issues have really kind of moved, with the tides here over the past decade or so?
Yeah, I think there definitely, like, to your point, there are I don't know if fads is the right word, but there's like
trends or topics
trends.
du jour.
Exactly. There's certain cases that there's lots of those cases at a certain period of time. So one is like the Swiss bank cases, right?
Mhm.
So like, several years ago, DOJ went heavy at stopping and shutting down offshore tax evasion schemes. And they came to, massive financial resolutions with banks overseas that, were allegedly aiding or assisting their clients in hiding funds offshore, lots of money offshore from the IRS. And that was, I think, everyone would agree, a very successful operation by IRS, by DOJ to get these massive settlements and shut down like all of this offshore stuff that was going on. So that was definitely a trend several years ago. I was thinking of another type of case that was very big at DOJ when I was there, which were stolen identity refund fraud cases, which were SURF cases. And the reason I was thinking about those, Chris, were those were cases that weren't your traditional tax cases. Those were the cases where a bad doer would get a ton of identities of other people and then file tons of, you're talking like hundreds of tax returns in the name of those stolen identities and get the refunds directed to them through like a prepaid debit card or something like that. But what was interesting about those cases is they were different because a lot of the targets of those cases were like the street level criminals that you were talking about, someone who might get stopped by the local police, the local police do a search warrant, or they stop a car and they find, 15 different green dot prepaid debit cards in the car
Yeah.
in 15 different names. And they're like, wait a
Wow.
minute, this isn't right. And then they find in the back seat hundreds of tax returns,
Right.
or-
Classic drug
yeah,
dealer behavior, right? Is just a bunch of
right,
1040s.
right. And what we would say when we were, when, and I'm sure Jonathan's heard this too, when I was at DOJ Taxes, these criminals are smart guys and they realized this stolen identity refund fraud scheme was they could do it from the comfort of their home, file these tax returns, send them off, and get tons of money, and it was very easy. So that was another trend that we saw several years ago. And then, but I think I would just add to this question that, the IRS and DOJ tax have a long-standing enforcement program of, going after small business owners, individuals, doctors, lawyers, business people that make a lot of money that are cheating on their taxes. And I think you're going to continue to see those types of prosecutions, as well as seeing like the trendy, Swiss bank program or the SURF cases, whatever it may be. But, that's certainly, I think offshore, like Jonathan was talking about his international experience, international tax schemes will continue to be of interest to the DOJ and the IRS because of the individuals involved and the dollar figures involved as well.
You always need a good acronym, right? So SURF will be our acronym takeaway of the day. That is a stolen identity refund fraud. Not, involving, white caps off the Pacific coast here, but a little bit more focused on tax. Jonathan,
That sounds cool,
obviously,
though.
I know. Now, Jonathan, the ball is in your court now. You've been raised the ante of an acronym, so your response will need to involve a significant, if not better, acronym. Where have you seen kind of techniques or tactics change with the times over the past decade?
Yeah. So what I think one is going to be data analytics, which I think we'll talk
Hmm.
about maybe a little bit
Yeah.
later. So that is definitely one that IRS and CI realized that we had a bunch of data that we were not utilizing to develop cases. So that is one. Two is what CI did about 10 years ago, I think now, is they formed some specialty groups. So one is a large international group that is run out of their Washington, D.C. field office. And they basically, as an agent, you can apply to be part of this group. And they're taking the best of the best agents to work large international cases. So that is a deviation from the way it normally works. Normally, you're in a field office. So I worked in Philadelphia. I worked for the Philadelphia field office. All of my work went through there. Now I could sit in the Philadelphia field office, but I was assigned to this group in DC, supervise in DC. And again, I was, those agents work very large, high level, big dollar amount cases.
Hmm.
A secondary group, again, run out of DC, is called the Gift Group. So
There we
I'll give
go.
you an acronym.
Perfect.
There you
Tell
go.
us.
So it's the global, oh my word.
It
Global
doesn't count if you can't
illicit,
remember it.
here it is, global illicit financial transactions. So what they're doing
Nice.
is basically working money laundering cases. So they're going to get into the non-tax, you know, drug dealers, transnational organizations, just big money movement. But there is a difference between how you can work a tax case, what information you can access within the IRS, how you approach it versus a money laundering case. So that's what I've seen over the last maybe 10 years is that shift where they are trying to pull resources together. And that way you have agents in a group that have some experience working large cases, international cases, that expertise pulled together, and it's really a force multiplier.
Awesome. Jonathan, just a quick, again, definition. When we say international tax case, how is that different from, I'm imagining Chris lives in the United States. He files a U.S. tax return. I mistake civilly or intentionally defraud criminally. That's my kind of tax case. I think that wouldn't be international. How do we expand that to be something international?
Sure. So international would be an offshore bank account using, as I said, a trust company, a promoter trying to move, or your business is just involved in international transactions.
Gotcha.
And as part of that, you may keep money offshore, not bring it back to the U.S. or send money offshore that was in the U.S. And there's a distinction there because it's much harder, one, to investigate those cases for, obviously a number of
Jurisdictional
reasons.
issues,
Right.
availability of information. Yep.
Right. And really, the biggest thing is getting the evidence. So instead of just getting a subpoena, if I'm working a case, John's the prosecutor, I go to John, he gives me a grand jury subpoena. I drive down to the local bank and I get the records in a few weeks to a month. International case, I now have to either do a tax treaty request, an MLAT, which is almost like writing a search warrant affidavit to get foreign evidence. So you have to prove that a crime is being committed and why that evidence is needed to investigate your case. So much more complex, time consuming, and again, takes a lot of time and skill to work those cases, to investigate those cases.
I got you. One of the things our viewers and listeners love to hear the most is kind of that classic war story of an interesting case you might have worked on when you were doing that tax enforcement work. So John, passing it back to you, what's a major case with kind of an interesting fact pattern, whether it be long, short, large dollars or not? How did that come in, and what were some of the interesting issues with that in your experience?
Sure. So, I did a trial out in Las Vegas. And it was a really fun experience, because it was my first, it was an employment tax issue. And I am going to nerd out for a
Please do.
second here. It was actually an employment tax issue that then became, a trust fund recovery penalty case, which, Chris, have you ever heard of that? I'm sure
I don't know. We got to
Jonathan.
make up that acronym now. The trust fund. Go ahead.
Yep. So basically what happened was this small business owner out in Las Vegas um, was not paying employment taxes and kind of blowing off the IRS for a long time in terms of her employment tax obligation. She owned a home healthcare business and very successful home healthcare business, had dozens of providers working for her. But essentially what happened, my memory is if you blow off the IRS and you don't pay employment taxes and there's an assessment done like you owe this for employment taxes, eventually it becomes what's called a trust fund recovery penalty, which is like another, it's another acronym, if you will, but it becomes a penalty that you owe now in lieu of the employment tax. And the way that those cases are prosecuted, and they're pretty unusual, in this case was as an evasion case, right? So like the classic tax case that anyone thinks of is tax evasion, right? Like it can be used if you file a false tax return, but even if you don't file a return, like if you're really trying to hide things, conceal things from the IRS, that's just kind of like big picture without getting into details. That's a tax evasion case. Well, in our case, we charged her with evasion of the trust fund recovery penalty. And nerding out, it was kind of unusual to do a tax evasion case involving the trust fund recovery penalty. But what was really cool was, of course, because we were in Vegas, what did she blow all her money on? Gambling. She loved to gamble, and she went to all the casinos with the money that she should have been paying to the IRS in employment taxes. So for me, it was fun because it had like this interesting, unusual tax issue. It was like, okay, yeah, of course, this is a Vegas case. There's all these casinos that are involved.
Yeah.
And,
Interesting.
yeah, and I got to learn a lot, Chris, through that case about how casinos, like, what do they do for like KYC, for know your customer? See, another acronym, Chris.
Yeah, KYC is a good one. Yeah.
What do they do to do due diligence on their customers? This woman it was sad. I mean, I think she had a gambling addiction and she blew hundreds and hundreds of thousands of dollars at the casinos in Vegas. So I learned, as I was saying, like a lot about the due diligence practices of these casinos to, know their customers and make sure they're, on the right side of the law and not facilitating money laundering or tax cases. But yeah, that's the one I would mention.
I love it.
So.
Jonathan, love to hear a war story from you as well, to the point where we can talk about things. I know some of your stuff is probably confidential.
Yeah, I'll keep it high level, but mine was my first international case, again, which was a referral over from CI, and it was a tax shelter. So in this tax shelter, what the bad actors did was they identified businesses, in this one, C Corps, that were dissolving. So if you had a mom and pop business, say you own a car dealership, and you were selling your car dealership, before you filed your final tax return, these guys would come in and say, hey, we have a way to mitigate your gains. So we want to buy your business from you, not the car dealership, but they want to buy your 1120. So what they would do is, and they were never specific with the people, but what they would say is, we have losses that we can use to mitigate your tax, right? Mitigation.
Advantageous tax-wise for us. Here's $500. Let us do this kind of thing.
Yeah. So basically what they would do in this case was split the tax due and owing, because it was never going to get paid. And the way they mitigated, or we proved evaded the tax, was first they had entities offshore that they would wire the money down to the islands and basically make up currency and interest rate swap options. These transactions never occurred. They had somebody in the islands as a nominee signing trade confirmations. Then they would wire the money back and buy more corporations. So at the end of the day, that was one set of it. Another set, they figured that the IRS was going to catch up to this at some point. So they were using a boutique bank in Europe that were in on it and agreed to basically help them funnel the money. So again, they would just funnel it and cycle it back and purchase more corporations. And again, very interesting case, very technical. As I
Amazing.
mentioned, really tough to get records from some of the tax havens and some other places in Europe that have secrecy laws. So, we were able to prove that there was a huge fraud going on.
Hmm.
And at the end of the day, the case ended up being $240 million in evaded C corporation taxes. Yeah.
Amazing.
Wow.
That's wild to
That's
hear.
very cool.
So don't go out buying 1120s if you don't know what you're doing. It sounds like Jonathan
Yes.
could be in trouble. Uh, so I want to talk too about kind of where we're at and where we're going in this world. Everyone knows the old adage, nothing is certain in life except death and taxes. I would add on to that death and taxes, and tax enforcement is probably going to be a part of everyone's life for the foreseeable future. It's 2026. We're in a ever-changing federal enforcement world here in the United States. I do a lot of work with the SEC and the DOJ. There's been a variety of discussions around staffing and case focus and everything like that. So I want to hear from both of you kind of where you see, I think relatively recently, you both actually, within the last year or so, have been, both with the government and have moved on. Where do you see the enforcement environment today and maybe what should we look out for in the near future? Jonathan, we'll start with you.
Yeah, so this has been an interesting year. It's been widely publicized. Agents from a lot of agencies, including CI, were pulled into various um, prerogatives of this administration, such as immigration enforcement, safe streets initiatives from several major cities. Um, that is always difficult when an agent is pulled away from casework, even for 2 week periods at a time. You lose momentum,
Hmm.
you lose touch with the prosecutor, other agencies you may be working with. So, I mean, that has definitely had an effect over the past year. Um, Not sure going forward if those, the immigration enforcement and the agents supporting that has stopped. But the Safe Street initiatives have continued. Not sure how long or if that is going to continue into the future. So that is difficult. One, for ongoing cases, and two, for agents that are onboarding, newer agents to get trained up properly and get that experience. It's a distraction from the core mission of working tax, money laundering, Title 31 cases. So I think at this point, it's really difficult to predict where we're going to be even in the next year. What I will say, and I'll let John address it in more deeply, is there's been a lot of turnover in DOJ. That's one, and DOJ tax division has been, I would say, changed. It's maybe disbanded, and again, I'll leave that for John. But from a CI point of view, it's really difficult. Financial fraud cases, and I'll throw the FBI and the other agencies involved. You really need people like John, prosecutors like John, that have the financial expertise, who have experience to work those cases. With the turnover, I'm getting feedback from my former colleagues who still work with CI that has an effect on what is happening now. So it's hard to get those cases accepted at the local U.S. Attorney's office, to get them investigated, prosecuted, charged. So I think that definitely has had an effect over the past year, and I do see that as an issue going forward until they can restock the AUSAs with experience and get them, trained up on how to work those cases.
It's interesting to hear. Obviously, that it's a blip in time, if you will, over a long couple of decades, if not a longer tax enforcement landscape. But that blip is going to lead to short and medium term kind of responses of institutional knowledge and familiarity and everything like that. John, would love your take as well as where we're at and where we're going from an enforcement perspective.
Yeah, just to thanks, Chris. Just to pick up on what Jonathan was saying, I think it's not. Yeah, it's no secret. I mean, it's widely reported that it's out there that the DOJ and the government as a whole's lost a lot of people. So resources are tighter than they were, and I think the real world implications of that for tax enforcement is DOJ needs to be, pickier about what cases it brings, right? So like what Jonathan was saying, if an IRS CI agent calls the US Attorney's Office with a few different cases, maybe at one time they would have had staff to do those 2 or 3 cases, and now the US Attorney's Office has to say, well, we just don't have the staff. We have to take the one with, the strongest evidence or the highest dollar figure that's at play. The more limited resources is definitely, I think, affecting the day-to-day work. I think to both of you guys' point, and I think, Chris, you're right. It seems like a temporary thing, and the government is definitely trying to fill the ranks. I know at least in Massachusetts, they are hiring, um, you know, for AUSA spots. I would say the other thing I think to come, and it's very current right now too, is immigration. And another take on what Jonathan was talking about, I think with this administration's prioritization of immigration issues, I think all lawyers, like myself, need to think about, are there immigration consequences in a white collar case, which normally at another time, another administration, you wouldn't have to think about. But, you've seen recently, and shameless plug here, I just wrote an client alert on this with some colleagues, increased civil denaturalization matters coming out of the DOJ, where the DOJ is actually, moving to denaturalize people who have criminal records. That's like a new enforcement program. So that can affect tax, people who are convicted of tax crimes too. And I think, a lawyer that's a tax specialist, like myself, and I hope to be, I'm new at this, needs to think about that and explore those, those issues and exposures with their clients as well.
Interesting. So we're going to get to the wrap up here. We've spent 30 or so minutes talking turkey about tax enforcement. A bunch of nerds here nerding out together. John, one thing that you would like our listeners or viewers to take away from this conversation, or something we haven't talked about you think is relevant, going forward?
I would say, I think it's really important for our listeners, to know that, if the IRS comes knocking at your door, if they're calling you, if they're serving you with a letter, I think you do want to have trusted advisors. You want to talk to your CPA. You want to talk to a lawyer, someone who has experience and background. And, there's people out there that offer all different types of services at all different price points. But I think, if the IRS is, seeking to engage with you and really, you have a potential issue, you really need to get trusted advisors involved who can counsel you and walk you through that, so that, whatever that looks like, right? You want to mitigate the damage, lower the risk. And that's why, having a good lawyer, a good CPA, a good team behind you is really important. So that's my takeaway, Chris.
Love it. Jonathan, same to you. What do you think is something we haven't talked about, or another piece of advice you want to reiterate for our group here?
Yeah, absolutely. To build on what John's saying, I would tell everybody that no matter, even if you do hire somebody to prepare your tax return, what's on your tax return is your information.
Mm-hmm.
So there are a lot of people out there that are doing bad things. They're saying, I can get you a bigger refund. They don't have a magic wand. They cannot get you a better refund than the guy
Right.
down the street, right?
Uh-huh.
That
Right.
cannot happen. If somebody promises you that, they're doing something probably illegal, but definitely shady, right?
Questionable, yeah.
Questionable. So stay away from those people. 2, stay off of TikTok for tax advice, right?
I love it.
Like maybe to make sourdough bread or whatever you use TikTok for. There is a lot of information online on TikTok, on all the socials,
Reddit.
Reddit. There are a lot of people out there giving tax advice. Don't do it, right? I would say it's every year the IRS releases the Dirty Dozen tax schemes.
Right.
And for the past several years, it's been social media advice that
Interesting.
people are doing what they see on TikTok. And guess what? They get the tax bill, and that is a lot of money with penalties and interest, and it doesn't go away easily. So I would say just be careful.
I
And
love
like
that.
John said, if the IRS comes around, find somebody that knows, that has experience dealing with the IRS, not your brother-in-law who, had an accounting class 25 years ago in
Mhm.
school. Find somebody like John, find somebody like me that has experience, knows the system, can give you some legitimate, real, useful advice.
That's a great way to recap today, and also think about, right, if you're getting your tax advice from a TikTok financial influencer, or finfluencer as we sometimes call them, when you get a 6-figure tax bill from the IRS, my guess is that that individual with that advice on TikTok is probably not going to respond to your request for further detail on what their analysis was for whatever strategy they were purporting. Well, John Mulcahy, counsel at Nixon Peabody, and Jonathan Schnatz, a principal here at Withum. Thank you so much for joining us here on the Immaterial Podcast. We love your insights and getting to nerd out with you guys.
Thanks, Chris. This
Thanks,
was fun.
Chris.
Got it. As always, our listeners and viewers, you know that we promise that although the Immaterial Podcast isn't authoritative, it will always be authentic. We'll see you next time. Thank you for tuning in. The Immaterial Podcast is brought to you by Immaterial Productions LLC. Any opinions or discussions on the Immaterial Podcast are provided by the hosts and guests on their own behalf and not on behalf of any employer, government agency, regulator, or third party. The information provided herein is for educational and entertainment purposes only and is not formal legal or financial advice. You can find more from the Immaterial Podcast on social media platforms like YouTube, LinkedIn, X, and TikTok at Immaterial Pod.